How will Putin's play hurt global growth and the stock market? And why did tech stocks actually spike yesterday big time and is zip now in the buy zone? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, Putin's play really is upsetting the world right at the moment. Stock markets haven't really gone madly down, have they? But what do you think's the outlook for both the global economy and ultimately stocks?
Well, I think what's interesting, Peter, is it's obviously affecting Europe more than the US. And I think that was always going to be the case because Europe's a lot more dependent on trade, a lot more dependent on the oil and gas coming out of Russia. And we've seen, obviously, German banks and others have got exposure to, Russian companies that there's going to be some problems. So I guess it's just a bit surprising it took longer for Europe to sell off than the United States. I think the game plan still here, Peter, is as long as it's contained to essentially within the boundaries of Ukraine, then look, it's not so bad for stocks. If we get into a really dangerous situation, then obviously we're going to see more risk off. But my sense is the market will get a little more comfortable about this over the short term. But let's see how it plays out.
Yeah, it's interesting, Paul. I think the critical issue for us to watch, and the one that I worry about is, and there's probably two questions. First question is, how long does this thing go on for? The longer it goes on, the worse it will be, I think. But secondly, what's the impact on the price of oil? Now, I saw a really interesting analysis by a US chief economist, I think of UBS or one of those investment banks, only this morning. Ali McCarthy was saying that if we get 2 quarters of oil price at $125, that's a high price.
Mm-hmm.
He said that will take about 0.5% off global growth, which is not a lot. And therefore, she said, probably what we're seeing now is a buying opportunity for the stock market, further down the track later this year. And I think that's probably the analysis I'm comfortable as well, as long as this doesn't get really out of hand in terms of what Putin does, what the sanctions mean, what businesses are affected. All that sort of stuff is a big question mark, but that's the current thinking by the big end of town investment banks.
Yeah, I mean, look, the risk obviously does something really crazy, Peter, and you or I can't predict that, and that's why the market is going to remain on edge. But I think this is a much bigger impact on Europe than it does the US.
Yeah.
And as long as the oil price doesn't go crazy, I think this is something that the markets will adjust through fairly, not necessarily the next week or so, but it won't take that long before I sense that we'll be sort of, what's going on there will be sort of the second or third story of the day rather than the first story. We'll be much more worried about interest rates again and the Fed than what's going on in Ukraine.
Okay, let's go to why tech stocks had a really good day yesterday. What's the thinking there, Paul, do you think?
Well, again, it's carried on again to some extent in the US. We've seen bond rates, as in sort of the flight to safety, which often happens in these situations. When they have a risk off, we saw that the 10-year US Treasury bond, it was looking 2%. Everyone was expecting to go a lot higher. And then all of a sudden, within 2 days, it's down to about 1.7. So we've seen a huge rally in the US government bond market. And also the 1 and 2 year rates come down too, which probably suggests that the Fed is not going to be as aggressive as some people has feared. I think watch that 1 year and those 2 year rates. It's really quite important. So the 2 year rate down to about 1.3, I think today. It was 1.5. So I think the chances now of, the 7 rate increases is receding a little bit. And that's what's helped tech stocks in the US and Australia. And also they were so oversold, Pete. So we had to get a recovery here at some stage. Look at particular the price action on Block, which was just on the 24th of February down at about $80 US. All of a sudden it's now 140 or a bit more. So a huge rally there. Some of our tech stocks have followed here as well.
Yeah, totally. I had a good day at long last. But what I think is really interesting is that because, as you make the point, that the bond yields have fallen because people are rushing to buy bonds and they don't care what price they pay, they want the safety. That effectively pushes bond prices up, the yields down. And that implies that, as you point out, the central banks of the world might not raise interest rates all that quickly. So therefore, you're saying risk, because the risk is off, we now chase more risky stocks called tech stocks. I love this.
It's a bit bizarre. I mean, like I think the whole interest rate stuff in tech stocks is also somewhat bit too academic. But when we're in we've been selling them off because interest rates have been going up. When interest rates come down, we buy them back a little bit. Yeah. I think I think the US yield curve I think is really interesting, Pete, because you can get a rush to safety where people just buy long bonds and the short rates don't move much, but the short rates have also come down too, which to me, I just think that says the Fed, the 7 interest rate increases that were almost built in many models. The magic number of 7 comes from there are 7 more Fed meetings this year. Right? Yeah. The interest rate increase for 0.25% each time, starting on the 16th of March, which I still think is going to happen. But maybe, the Fed is just a little more careful because, with the world economy who knows how this thing plays out. So, and we got the same noise yesterday out of the Reserve Bank, Peter. I mean, here locally, which seemed, I think if there was one read from that, it was basically, look, we're in no hurry to increase interest rates here.
Yeah, good on Phil. Good on Dr. Phil. Let's go to the final one. Zip has bought Sezzle, and Zip has been challenged. It hasn't seen its share price go with the tech stocks up. But do you reckon this play is a positive for Zip, Paul, and therefore Zip is in the buy zone?
Yeah, I think it is, Peter. I mean, remember that it raised capital as part of, not necessarily for the transaction, but it raised capital $1.90. So yesterday for Zip to close at, I think it was $2.08. It wasn't too bad. Just completed a capital raising. So, look, I think Zip it wasn't that long ago, Zip was almost $10. In fact, it might have got over $10.
Well, it was 12, yeah. Yeah, as a very small shareholder, I remember it being 12. Yeah, go on.
No, it being 12. I didn't realise they get that high. So down to sort of $2, raising capital $1.90. And for Zip shareholders, there's a share purchase plan of $1.90 that they'll be able to subscribe for. So I think Zip's in the buy zone, Peter. I think the Sezzle acquisition looks good. It's bulking up. They haven't paid too much for it. It's mainly a script for script, which is also a big bonus. I'm surprised the Sezzle people gave in so at such a small premium. Maybe there's something I don't know, but the US is the market, takes out a competitor, should do well, and it also sort of brings forward the time when Zip sort of becomes profitable in a more than a positive sense, and I think it should look pretty good. So I think it's in the buy zone, Pete. Doesn't mean it won't get blown away if Ukraine goes crazy, but look, I think there's an opportunity to stock I like at this price.
Yeah, and Sezzle, its whole business is in the US, isn't it? So it's good for Zip. I should say, Paul, that when you think about a company like Zip, it ultimately it's based on where the future will be. And I am intrigued that younger people don't like credit cards and they prefer buy now, pay later. So, which makes me think buy now, pay later has a future. But one last question, and being an ex-banker yourself, why wouldn't a company like ANZ think about buying Zip and just getting buy now, pay later all in one go because they're cheap at the moment?
Well, I'm not really sure, Peter, but I mean, ANZ still can't even work out how to write a mortgage. I guess thinking about buy now, pay later is too far from. Someone said to me yesterday, a long-term ANZ shareholder, that Macquarie's market cap is about to overtake ANZ. So I think that tells you something about the caliber of the leadership at ANZ.
Yeah. So the big four will become what? Big 3 and a bit. All right, Paul. We're shifting us the usual way. I'm Peter Switzer. And he's Paul Rickard, and we're mad about money. It was a pretty lousy finish, but, well, we're doing it Zoom.